Hey, Bowtie Nation, Joseph Hogue here with what could be the biggest unintended consequence of the war with Iran. A trigger point that is just getting started with a 15% jump in the five stocks I'm watching, but potentially much, much more. I'll reveal what's about to happen, why those five stocks are taking off, including three penny stocks that could explode higher. Before I show you those five stocks, though, I've got to give credit to longtime Bowtie citizen Amy from our Facebook group for this idea. Amy is always doing the deep research into ideas and suggested this one. And Nation, while investors obsess over AI chips and the next trillion-dollar tech company, a completely different crisis is quietly building in the world's food supply. The conflict in the Middle East is threatening one of the most fragile supply chains on Earth, the chemicals that make up modern farming. Shipping routes through the Strait of Hormuz move more than a third of the world's fertilizer ingredients, with the disruption causing a spike of 55% in one input. This problem starts with the strait there, which isn't just critical for oil, but just about everything else that comes out of that region, and has ground to a halt since the end of February. The shipping lane sends a third of the world's fertilizer trade, with the price of urea, a nitrogen-based fertilizer, jumping 32% in a single day and up 55% from the start of the year. And production is already being affected, with Qatar Energy shutting down its output at the world's largest single-site urea plant after losing its natural gas feedstock. And those fertilizer shortages don't just start in the region, they expand outwards. One of the most important inputs here is sulfur, a key component to process phosphate rock into usable fertilizer. China, the world's largest fertilizer producer, imports nearly half of its sulfur supply from Persian Gulf countries, with prices jumping past $520 a ton, and are already more than 3 times last year's price. Folks, the importance of sulfur cannot be underestimated here as essential to one of the world's most important agricultural elements, that phosphate mineral. Along with nitrogen and potassium, phosphate makes up the three nutrients agriculture depends on to produce fertilizers and boost those crop yields to feed a starving world. Without phosphate fertilizer, supply disappears and food production plummets. And it's why policymakers are paying attention now. Earlier this year, 68 members of Congress signed a bipartisan letter urging the Department of Interior to designate phosphate as a critical mineral for the United States. China controls more than 40% of the global supply and processing, and any bottleneck could cripple U.S. food production. That's why I think one of these five stocks could be the next target for government intervention, a government investment in the company by buying those shares. I'm going to highlight the stocks to buy next, including those three penny stocks, but these risks go well beyond those fertilizer prices. Disruption on the Strait and through the Middle East will ripple through the global food supply. Gulf countries alone produce 15 million tons of urea, diammonium phosphate, and anhydrous ammonia fertilizer each year. Natural gas makes up 70% of the production cost for nitrogen fertilizers, with the price spiking 15% since late February. Nation, even if the Strait of Hormuz were to open tomorrow, the disruption could still mean months of fertilizer shortages. If the Iran conflict drags on, though, it could explode into a global crisis, with the companies producing that phosphate and related fertilizers becoming an issue of national security. And first up here is one of my favorite, Mosaic Company, ticker MOS, the largest producer of phosphate fertilizer in the United States. And the company mines phosphate rock mostly here in Florida and processes it into fertilizers. Mosaic's advantage, and why it's one of my favorites in this theme, is its vertical integration, owning the mines, the chemical processing, and the distribution, turning that phosphate into fertilizer. That means when fertilizer prices rise from these supply disruptions and shock, Mosaic can capture that full value chain. Shares here are already up 32% over the last month, but this theme isn't yet fully baked into the expectations for revenue growth at just 4% this year. And that number is going to get upgraded big time over the next few weeks ahead, and next earnings report in May could be a big surprise upside. Here we see analysts expecting 9.6% revenue growth, very strong for this quarter, but only 4% for the year, down 1% for next year. So there is a lot of competition in this space. Prices were coming down before this, so only $12.5 billion in revenue expected this year. Again, I believe that gets a big upgrade over the next few weeks, as well as when the company reports there in May. I think the management guides this much higher on those higher phosphate prices. Even more than that, though, we are seeing negative earnings growth from a lot of these companies, down from $2.27 reported in the year ago, down to expectations of just $1.72 for earnings expected this year. Again, I think with those higher phosphate prices, with this company being able to play in that entire value chain for phosphate, all the way from the mining, the processing, all the way into the distribution, I believe it's able to squeeze that, use some operational leverage, squeeze those that profitability, and get a lot more than $1.72 in per share earnings this year. I think that's going to be a big upside catalyst for this stock before they report on May 5th. Now, of course, with any stock that has gone so far so fast, you want to check out these valuation measures. You want to make sure that it's not so terribly expensive already that that opportunity is already out there. Okay, so here we see $10 billion market cap. Market cap is the size of the company, all the shares outstanding there. $10 billion company there. Price to sales of 0.83 times right now. Okay, so we do see that is higher than where stock traded at over the past 2 quarters, but not too high compared to other points in history. Okay, 0.83 times price to sales. That's the market cap divided by the sales. If we do see that higher sales growth, we're going to see the bottom part of this, the denominator, go up, right? So that price to sales will go down. Price to sales of 0.83, 0.7 is not too terribly expensive here. Trailing PE 18 times on a PE basis. So that is quite a bit higher than over the last couple of quarters. But historically, it is traded at much higher. Investors have been willing to pay a higher price per every dollar in earnings per share. So this is not too expensive. I think there's still a lot of great value left in Mosaic. Next up here, Intrepid Potash, ticker IPI, is our first penny stock on the list. And don't let that $48 share price fool you. This is a tiny $654 million company with a lot of upside potential, up 76% already this year on that disruption. Now, Intrepid is the only U.S. producer of muriate of potash, another essential crop nutrient used in fertilizers. The company operates mines in New Mexico and Utah to produce that potash, magnesium, and sulfate products for agriculture, as well as some industrial applications. And here, while Intrepid isn't a phosphate company, it sits directly in that broader fertilizer supply chain thesis alongside the phosphate and nitrogen. As fertilizer shortages drive prices higher across the industry, potash producers are also going to benefit as well as those farmers increase their applications of all available nutrients. The advantage is this is one of the few domestic U.S. sources of potash. That's an advantage against reliance on imports from Canada, Russia, and Belarus. So if the government does try to step in, try to lock in some of these critical elements, these nutrients, this could be the company to do it. Here in the expectations, we see a lot of what we saw in Mosaic, 10% revenue growth expected for this quarter. So very strong revenue growth this quarter, but then negative revenue growth for the year and for next year. Just negative 1% revenue growth expected this year, negative 4% next year. Again, with those higher sales price across the nutrient supply chain, I think they make a lot more than $250 million in sales this year. Again, this company reports on May 4th, so just the day before Mosaic reports. I think they upgrade this guidance. I think they say they upgrade their forecast for revenue growth. It's a lot higher than this 250, and that's going to be a positive catalyst for this stock. We also see that negative earnings growth here in the earnings estimates. Now, this is only of two analyst expectations, two analyst targets, so you got to take this with a grain of salt. But down from $1.44 reported in earnings per share last year to just under $1 per share expected to report this year. Again, I think as they use some of that operational leverage on the higher revenue growth, I think they report better than $1 per share, and I think they guide to that here come this next earnings report. Here in the valuation measures, a little bit more expensive than we saw with Mosaic. Okay, $48, $49 price there. That would be about 49 times on a price to earnings basis. Okay, so the price of the stock, $49 divided by the earnings. We're expecting a little over $1 per share in earnings over the next year. It would be about 49. So it would be a little bit more expensive than maybe the Mosaic, where Mosaic was trading for. Price to sales, $654 million market cap. Again, folks, very small company compared to a lot of these. $10 billion company we saw with Mosaic, $40 billion company we're going to look at next. $654 million company is tiny. It is a penny stock. Here, if they do $650 million market cap divided by $250 in revenue over the next year, that is about a 2.6 times price to sales valuation. Okay. Now I believe they do report, or they do come out and guide that $250 revenue much higher. But right now, 2.6 times price to sales. And we can see that is quite a bit higher than where it's traded at in the past. Okay. So price market cap divided by the sales, 2.6. That's double what it's traded at in the past and on the average here. So quite a bit more expensive than what we saw with shares of Mosaic, but definitely a critical element and could be a target for government intervention here. Next up, Nutrien, ticker NTR, is the largest fertilizer company in the world, producing potash, nitrogen, and phosphate fertilizers. The company produces and distributes millions of tons of crop nutrients every year and has massive distribution networks serving farmers throughout the Americas and Australia. Nutrien is a giant $40 billion company, though, and maybe not as strategic as the first two stocks. But these shares are up 34% already this year, so it is definitely benefiting on this trade. And here we see similar expectations for revenue and earnings, maybe a little better, 7.3% revenue growth expected for this quarter and 2% for the year, 0.5% revenue growth for the year. They do report on May 6th. So 1, 2, 3, 4th, 5th, and 6th, all three of these first three companies going to be reporting their early May. 2% revenue growth expected. Again, I believe that gets upgraded here over the next few weeks, and definitely guidance there on the May 6th when they report. Interesting here, this company is, rather than negative earnings growth that we've seen from those other two companies, this company is able to grow its profits. $4.56 a year ago earnings per share, expected to report $4.86 this year. So able to use maybe a little bit of that operational leverage, a little bit more efficiency there to produce a positive earnings growth. I'm going to highlight two more penny stocks with triple-digit potential next, but one way to play this, get those higher returns with maybe the larger, safer companies like Mosaic, is through option strategies. For example, I can go to the options available on Mosaic, and we'll use the options expiring June 18th. That's 3 months to see the prices rise on this theme. We can use what's called a bull call spread, buying the call options with a $32.50 strike price for $3.40 each, and then selling the $35 strike to collect $2.50 each. Now that means our total cost is only 90 cents per share. We make money between that $32.50 to $35 range in the shares of Mosaic. But folks, this is not just a bet on the stock, it amplifies the upside. If the stock price increases just 11% to $35 each by that time, this investment will make us a 177% return in just 3 months. I know that's a lot of options jargon, but if you're not using options investing, you are missing out on one of the best ways to not just boost your returns, but also reduce risk and create income. I asked all you out there in the Bowtie Nation how you've been using our options investing course and was blown away with the response. George made over $26,000 buying the $30 calls on SMCI, a 315% return in 2 weeks. Justin made a 380% return on one call option strategy in 1 week. Then, longtime Bowtie brother Chad there generated over $10,000 in income 1 month across 5 stocks from Amazon to Alibaba and Nvidia. To help you get started, I'm relaunching our Ultimate Options course. Over 3 hours of video, I start with the basics, then walk you through 29 option strategies, when to use each, and how to set it up, including real-world examples with shares of Tesla. The course also comes with a one-of-a-kind strategy finder to help you find the right option strategy, and an options calculator to show you exactly how much money you can make. Now, right now, I'm relaunching the course at a 38% discount. Save $150 off. You're going to get all the basics to get you started, the strategy finder to make sure you're using the best strategy, the options calculator to show you exactly what to expect, walkthroughs on all 29 strategies, and a 14-day money-back guarantee. Now that $150 launch discount is only available with the coupon code in the link I'll leave in the description below, so check that out or just scan the QR code here. Ariane Phosphate, ticker DRRSF, is the first of our super small penny stocks. This one just $42 million market cap and 20 cents a share, but you have got to be careful with these. This and our next stock both trade on the over-the-counter or the OTC market, off that normal NYSE or NASDAQ exchanges that do require audited financial statements and other investor protections. Ariane is a development stage mining company building a large phosphate mine in Quebec called the Lac à Paul project. The deposit is believed to contain high-grade concentrate used to produce phosphate fertilizers. Now this means the company is still pre-revenue and very risky. If phosphate becomes a strategic mineral and supply tightens globally, new deposits in stable regions like Canada could become very valuable. On the other hand, because it is still very early in its development, while the stock may benefit from a rush by investors into phosphate stocks, the company probably won't benefit that long term after the current disruption subsides, so this has to be more of a short term trade for investors. Nevada Organic Phosphate, ticker NOPFF, is even smaller here at just $14.5 million market cap and 12 cents per share, though the stock has rocketed 101% just this year. This is another development stage miner developing the Murdoch Mountain phosphate deposit in northeast Nevada. Now, the project contains a long phosphate rich rock bed that, unlike traditional phosphate operations that require complex processing, the company is hoping that the organic raw rock phosphate can potentially be applied directly to crops. Now, like Ariane, this is pre revenue, though it is a US company, so could be attractive if the company wants to target investment into these critical minerals like phosphate. Get your $150 discount and everything you need to start options investing with the special link in the description below. Get the strategy finder, the options calculator, and all 29 strategies, plus that 14-day guarantee. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.